something really interesting happened the other day. Bitcoin started dropping. The stock market looked weak. Most risk assets were selling off, but there was one sector that kept pushing higher: energy, and especially oil. Now, when you overlay Bitcoin with XLE, which is the biggest energy ETF, you can actually see how these markets have almost been moving opposite of each other recently. And the reason why I'm bringing this up is because I think it could have a huge impact on the crypto and stock market going forward. Because historically, during late business cycles, energy tends to peak after the broader market have already peaked. And if that pattern continues here in 2026, then the next major top for energy could line up with the next major bottom for Bitcoin. Now, that might sound crazy at first, but once you look at the macro environment and compare it to previous cycles, it actually starts to make a lot of sense. So in this video, I want to break down why energy still looks bullish, why that could continue putting pressure on crypto, and why the eventual top in oil might become one of the biggest signals that Bitcoin is finally ready to bottom. So let's get into it. Now, recently oil prices surged way above $100 a barrel. Since then, prices have cooled off a bit. Now, because of that, some people already think that move is over. But honestly, I don't think the bigger problems have been solved yet. Because even though the prices pulled back from the local highs, global oil infrastructure has still taken major damage over this period. And in some regions that could take years to fully recover from. At the same time, traffic through the Strait of Hormuz hasn't fully normalized yet. And around 20% of the world's oil supply moves through that route. On top of that, tensions with Iran has cooled temporarily, but the situation still remains unstable. So when you combine all these things together, there is still a very real argument that energy prices continues moving higher from here. And honestly, right now, the chart doesn't really look like it wants to slow down either. Even after the recent pullback, XLE still looks very strong compared to the broader market. And when one sector keeps outperforming during market weakness, that's usually something worth paying attention to. Especially because the S&P 500 still hasn't really topped yet. And this is where things get really interesting. Because historically, in late business cycle environments, energy stock usually peak after the broader market peaks. We saw this in 2022. The S&P topped first, but XLE continued climbing for almost another year before finally peaking. We saw it again during the 2008 financial crisis. Stocks rolled over first, but energy kept pushing higher for another 6 months afterward. And during the dot-com era, we saw almost the exact same thing happen again. The broader market topped first, but energy continued outperforming long after. So across multiple late cycle environments, energy consistently topped after the stock market. And honestly, 2026 is starting to look very familiar. Because so far the S&P still hasn't shown a clear major top yet. And if the broader market eventually starts breaking down later this year, history suggests energy could still continue pushing higher even after that happens. Now let's connect this to the macro side of things, because this is another reason why I think energy could still see more upside. Recently, inflation started moving higher again and pushed up toward 3.8%. And because of that, the outlook for rate cuts has changed dramatically. Just a few months ago, markets were expecting multiple rate cuts coming from the new Fed chair, but now those expectations are getting pushed further and further out. Right now, it's not expected that we are gonna see any rate cuts here in 2026. And honestly, looking at these numbers, Even 2027 is starting to become a bigger question mark. Now, of course, that's still far out into the future. But the point here is that expectations have shifted a lot. And honestly, that makes sense. Because cutting rates during rising inflation would be extremely risky, especially during an energy crisis. And on top of that, the labor market hasn't really broken yet either. Initial jobless claims have remained relatively stable, and they're still far away from recession level territory around 300k. The unemployment rate has increased slightly, but nothing major yet. So from the Fed's perspective, there isn't enough weakness in the market to justify aggressive rate cutting. And if rates stay higher for longer, risk assets stay under pressure, especially Bitcoin and crypto, because at the end of the day, Bitcoin performs best when liquidity is expanding, inflation is cooling, and financial conditions are easing up. And right now, we are honestly seeing the opposite environment. So with the labor market staying relatively stable over the past year, cutting rates for the Fed doesn't really make sense right now, because doing that could cause inflation to move even higher. Now, personally, I think the best scenario for the more long term would be for the S&P to roll over from here. Because if history repeats, even if the S&P tops out now, then energy is likely gonna continue pushing higher for a period before it tops out. And if that happens, then the eventual top in energy might line up with the bottom for Bitcoin. And honestly, that would make a lot of sense historically, because bottoms for Bitcoin usually happens when there is a lot of fear, liquidity is tight, inflation pressure is elevated, and markets are pricing in maximum uncertainty. That's usually what happens at the end of these late cycle macro environments, not the beginning. And that's why I think energy is one of the most important sectors to be watching right now. Because if oil continues higher, that likely means inflation remains sticky. It also means rate cuts continues getting delayed, and that keeps pressure on risk assets like crypto and Bitcoin. But once energy finally tops and begins rolling over, that could be one of the clearest signs that inflation pressure is easing and liquidity conditions are finally starting to improve again. And that's the exact environment Bitcoin needs for its next major move to the upside. So right now I'm paying a lot of attention to energy and Bitcoin, because historically energy topping out has lined up with a turning point in the broader market. And again, if this continues, then the top for oil could be the bottom for Bitcoin. But let me know what you guys think down below. Do you think energy still has more upside from here? Or do you think the top is already in? And also, do you think that Bitcoin has already bottomed? Or could we still see one more flush before the next major rally for Bitcoin begins? So if you enjoyed this video, remember to like and subscribe. Comment down below what I can do better in these videos. I love to hear from you guys, and I'll see you in the next one. Peace.